Hi everyone, we are going to learn about the sum of the general insurance products which were the continuation for the previous video in which we have discussed about the general insurance products like motor insurance and marine insurance. In this video we are going to learn about the machinery insurance, its functions and the documents required for claim process of machinery insurance. And the next topic is fire insurance, features and types of fire insurance and the procedure to insure the property under fire insurance and the procedure and documents required for claim settlement of this fire insurance. While coming to the machinery insurance that provides a security cover to the machines used by factories and industries. This insurance covers accidental breakdown and physical damage of the machinery, the cost of repairs or replacement of the damaged machine parts. Some insurance companies also offer riders to cover additional risks to the machinery or other aspects like cost like air freight, machine foundation and custom duty, etc. The insurance policy covers the loss due to sudden and accidental machinery damage emerging from both internal and external causes. Some of the causes can be short circuit, structural defects, losing of parts, excessive speed and lack of lubrication. And while speaking to the next topic is functions of machinery insurance. The main function of machinery insurance is basically helps organizations using machines. It covers the loss that the business may face due to the sudden breakdown of the machinery. The organizations gets the money from the insurance company for the repair or replacement of the machinery as per the need and requirement. This insurance helps organization grow by overcoming such losses. And there are two scenarios representing the functions of machinery insurance. They are partial loss and total loss. In case of partial loss to the machinery, the coverage will include full cost of parts, including labor charges, air freight charges, custom duty and the charges for dismantling and re-erection of the machinery. And the next function is total loss. Here, sum assured in this scenario covers the actual value of the items immediately before the occurrence by minusing the applicable depreciation value. Certain extra coverage can be enjoyed on the payment of additional premium. These cases include express freight, air freight, custom duty and third-party liability. And coming to the documents required for claim process of machinery insurance can be explained as below in the form of claim process. The claim process of machinery breakdown insurance varies from different companies. Some general steps can be taken by policyholder to initiate claim for this insurance. They are: insured must immediately notify the insurance company over the phone about the occurrence of the breakdown. The customer also need to provide the information in writing when asked by the insurance company. And the policyholder must give as much as information as possible about the nature and extent of damage or loss incurred. The insured must also take all reasonable steps to minimize the extent of loss or damage. Here, policyholder must preserve all the damaged or defective parts in the machinery for an inspection by the insurance company staff. And he should also must provide the complete documentary evidence to the insurance company and support in the claim of investigation process. Once the investigation report is successfully completed by the insurance staff and all the documents are verified by them, the insurance company triggers the claim settlements. Policyholders should submit all ID proofs and other documents required to settle the claim amount as reimbursement and receive the amount in his or her bank account. Here, documents required for claim process to get the claims under machinery breakdown insurance. A policyholders need to submit all ID proofs along with the policy document, invoice of the machinery, statement from the engineer stating the type and level of breakdown. In this process of claim settlements, there are some exclusions for machinery breakdown insurance. The exclusions are: machinery breakdown insurance can be availed by owners of large scale associations or MSMEs of India. However, there are various exclusions in the policy. Some of the exclusions based on the two categories are general exclusions and special exclusions. They are: the general includes war, civil war, riots and strikes, where include of fire and theft, etc., and also loss or damage as a result of two overload experiments, gradual development of abnormalities, defects, cracks, etc., in part of being ignored regularly in spite of knowing it demands repair, regular wear and tear of the machinery, pre-existing faults or defects in the machinery before the policy commitment, loss of use of the machinery due to conditions in the plant, and loss or damage because of explosion in chemical recovery boilers. These all are the general and special exclusions which cannot be claimed at the time of machinery insurance claims. And next, coming to the fire insurance. Fire insurance refers to the insurance that is used to cover damage to a property caused by fire. Fire insurance is specialized form of insurance beyond property insurance and is designed to cover the cost of replacement, reconstruction or repair beyond what is covered by the property insurance policy. These policies cover damage to the buildings itself and may also cover damage to nearby structures, personal property and expenses associated with not being able to live in or use the property if it is damaged. And the various features of fire insurance are: payment of premium. Here, an owner must ensure that the premium is paid well in advance so that the risk can be covered. And the next one is contract of indemnity. Fire insurance is a contract of indemnity and the insurance company is liable only to the extent of actual loss suffered. If there is no loss, there is no liability even if there is fire. For example, if the property is insured for 20 lakhs under fire insurance and it is damaged by fire to the extent of 10 lakhs, then the insurance company will not pay more than 10 lakhs. And the next function is offer and acceptance. It is regular in any contract. Similarly, the property will be insured under fire insurance policy after the insurer is accepted by the insurance company. It is compulsory to any contract. Similarly, the property will be insured under fire insurance policy after the offer is accepted by the insurance company. The next function is utmost good faith. The property owner must disclose all the relevant information to the insurance company while insuring their property. The fire policy shall be voidable in the event of misrepresentation or non-disclosure of any material information. And next one is insurable interest. The fire insurance will be valid only if the person who is insuring the property is owner or having insurable interest in the property. Such interest must exist at the time when the losses occur. And the next feature of fire insurance is contribution. If a person insured his property with two insurance companies, then in case of fire loss, both the insurance companies will pay the loss to the owner proportionately. Example, a property worth rupees 50 lakhs was insured with two insurance companies A and B. In case of loss, both insurance company will contribute equally. And the next feature is period of fire insurance. The period of fire insurance is to be defined in the policy. Generally, the period of fire insurance will not exceed by 1 year. The period can be less than 1 year but not more than 1 year, except for the residential houses, which can be insured for the period of exceeding 1 year also. And the last feature of the fire insurance is claims. To get the compensation under the fire insurance, the owner must inform the insurance company immediately so that the insurance company can take necessary steps to determine the loss. And here there are various types of fire insurance, which are namely valid policy. When the agreed value of the subject matter is mentioned in the policy is named as valid policy. This value may not necessarily be the actual value of the property. In the event of loss by fire, the insurer pays the admitted value of the property. And the second type is unvalued policy. An unvalued policy is one in which the value of the subject matter is not declared at the time of policy taken, but in case of the losses, the value is computed by assessment. This is also called as open policy. And the next type of policy is specific policy. In case of specific policy, the property is insured for a definite sum. If there is loss, the stated amount will have to be paid to the policy holder, but the actual value of the subject matter is not considered in this respect. For example, if a policy is taken for 20,000 upon a building whose value is 1 lakh and a fire occurs causing the amount of loss 20,000, the insurance company will pay the whole amount of loss of 20,000 irrespective of the fact that the building was insured for 1/4 of its value. And the next type of insurance is average policy. An average policy is one which contains the average clause. This clause required the insurance company to pay only that portion of the loss which is borne by the insured amount to the actual value of subject matter of the insurance. For example, a value of the property is 1 lakh. It is insured for 60,000. That means 60% of the total value, and the amount of the loss is 60,000. The insurance company will not pay 60,000 to the policy holder, but will pay 36,000. That is 60% of the 60,000. And the next type of policy is floating policy. A floating policy is that which covers the fluctuating risk of several goods laying in different localities for supply to various markets. Such a policy is usually taken out under one sum and one premium by the businessmen whose goods are laying at docks or warehouses. And the next type of fire insurance policy is stock declaration policy. This policy is taken for covering the stock where great fluctuations in the value can happen throughout the contract period. On such policies, 75% of the premium has to be deposited in advance. The maximum liability of insurance company is specified in the policy by the insured. At the end of the year, the average stock and the final premium is calculated. And the next type of fire insurance is loss of profit policy. This type of policy covers the loss of profit which sustains the result of fire. This policy is also known as consequential loss policy. And the next type of fire insurance policy is standard fire policy. This policy is issued for compensation of all direct loss or damage caused by lightning and burning. Such policies also covers damages by earthquake, heavy flood, explosion, cyclones and riots. And the next type of policy is reinstatement policy. Under this policy, insurance company pays more than the actual value of the property destroyed by fire in order to cover the cost of replacement of the property. It is also called the replacement property. This type of policy is not very common in these days. And the next type of insurance policy is schedule policy. A schedule policy is one which insures many properties under collective terms and conditions. Details of the properties and their respective rates of premiums are listed in one policy only for the convenience of the insured. And the next one is sprinkler leakage policy. This type of policy covers the loss of buildings as a result of the damage by his leakage of liquid or water. And the next is excess policy. This policy is issued for the stock of merchandise whose value is constantly fluctuating. In such case, it is not suitable to take one policy from certain sum. So the insured takes an ordinary policy for minimum value of the stock and excess policy for excess value of the stock. The actual value of the stock will be reported periodically. And the last one of marine insurance policies is maximum value with discount policy. Under this policy, 1/3 discount of the premium paid is refundable to the insured at the maturity of the policy. This policy covers the risk for maximum amount. These are the various types of fire insurance policies. And coming to the procedure to insure the property under fire insurance. It includes of various procedure steps like filling proposal form, inspection of the property, payment of premium, issue of the cover note or policy documents to the insurer. Here in the filling of the proposal form, it includes of description of the property, construction of external walls and roof, number of stairs of the building, occupation of each portion of the building, presence of HRDS goods, process of manufacture, the sums proposed for insurance, the period of insurance, history of previous losses, etc. Here, while coming to the inspection of the property, in this case of property of any business organization, whether manufacturing or other type of organizations, or the risk inspection report is submitted by the insurer or the insurer's engineers. The engineers submit in their report the nature of risk involved in the factory or the manufacturing unit. And the third step or the procedure involved in purchasing the fire insurance policy is payment of premium. Based on the proposal form and the inspection report of the engineers, the insurance company will submit the premium rates to the property owner, and if these rates are acceptable to him, then he should pay the amount of premium to the insurance company. It is also a legal requirement under Section 64 VB of Insurance Act 1938 that the premium should pay in advance in full to cover insurance by the insurance company. And the last one to insure the property is issue of cover note or policy document. On receipt of completed proposal form and inspection report, the cover note is issued. Pending preparation of the policy document. That means the cover note is an unstamped document issued to provide evidence of cover till the time the policy is issued. The cover note provides insurance against specified serious and immediate danger on the usual terms and conditions of the company policy. And coming to the procedure to settle the fire insurance claims. Here there are various steps involved in settlement of fire insurance claims. If there is any danger or loss arising due to fire, then the policyholder should immediately inform the insurance company in writing and with estimated amount of losses. And in the claim process, the survey report will be the first step of claim settlements. Here, if the amount of loss is small, you will get up to some extent of amount. The insurance company may depute an officer to survey the loss and decide on the settlement of the loss on the basis of the claim form and the officer's report. However, in large losses, an independent surveyor duly licensed by the government is appointed to give the report on the loss. The survey report would generally include of cause of loss, extent of loss, details and value of salvage, and how it has been disposed or proposed to be disposed of, details of expenses, compliance with policy conditions and warranties, details of other insurance policies on the same property, and the appointment of the loss and expenses among co-insurers. These are the various topics related to the settlement of these are the various matters deal with the survey report at the time of settlement of fire insurance claims. And the last one is claim form. The policyholder will submit the claim form with the following information such as name and address of the insured, date of loss, time and place from where the fire started, cause of fire, details of the property damaged such as depreciation, value of the time of fire, value of salvage and the amount of loss, details of the other policies on the same property giving the name of the insurer, FIR at the nearest police station regarding third party liability if any, and the settlement of claim will be on the basis of the claim form and the survey report. Decision is taken about the settlement or otherwise of the losses. And some of the basic documents required for the fire insurance claim may include of claim form duly filled in and signed by the insured, FIR, forensic department reports, laboratory test reports together with the mandate given, record of labor involved in activities related to the claim, original repair replacement bills with the receipt, photographs if arranged, departmental note on the accident, etc. are the basic documents required for the fire insurance claim, among with the service report, that is survey report, claim form and the settlement of claims. Thank you.